Hi everyone, Terrence here, and in this video I'm going to walk you through the standard loan application form, also known as the Uniform Residential Loan Application, which is a standardized form created by Fannie Mae and used in every residential mortgage transaction, regardless of whether it's a refinance, construction, or purchase. And this is an important application in that it kickstarts the entire loan process, and it's important to put accurate and detailed information on this because this is what lenders and banks are going to be using to determine your ability to secure a mortgage loan based on this information. So with that said, we'll jump in. The first section is the type of mortgage in terms of the loan. And if you're applying for a loan, you may not know what type of loan product you're going to be applying for, or the terms of those of the loans. Every loan is different. And so you may know the amount, the loan amount. So say if you're going to be purchasing a home for $400,000 and you're going to be putting a down payment of $100,000, well, the loan amount will be $300,000. So you can put that in the box there. You may not know what the going interest rates are, and really a lot of that's going to be determined by your conversations with your loan originator. So if you do know this information, great. I'll kind of put in what today's rates for a 30-year fixed are about 3.5%, and the number of months is going to be the number of months for the loan, and a 30-year fixed across or times 12 months is 360 months, and it's a fixed rate product. So with that, we'll go down to section 2, and pretty self-explanatory. This is where you're going to put the address for the property that you're attempting to secure a loan against. So if it's your current home and you already have a mortgage on it and you're looking to refinance, you'll just put your current address. If it's a property that you are purchasing, well, then you'll put the address of that said property. As far as the number of units, if it's single-family residence, it's 1 unit. Residential mortgage loans are all the way up to 4 units, so duplexes, triplexes, quad or 4-unit properties. The legal description you can leave blank. We'll pull that information from the title report as well as the year built. The purpose of the loan, pretty self-explanatory. In this case, we're going to say it's a purchase. And this section here is fairly important. This is determining how you're going to be occupying the property. And if it's going to be your primary residence, whether it's going to be secondary residence, which is like a vacation home, or if it's going to be an investment property, which is also known as non-owner occupied, meaning you're not going to be occupying the property, that you'll probably be leasing it out to a tenant. So this is very important to disclose what your intentions are with the purchase of this property. And we're going to say right now that it's going to be our primary residence. This section here is if it's going to be a construction loan. So if it is a construction loan, you'll want to fill this information out here. Again, the amount of the current total of liens that exist against the property, the original cost of the property, the current value of the lot. And again, if you're not sure, you can use estimates, and your loan originator can help you walk you through to get a more accurate value. The second one here is if it's going to be a refinance. So again, same type of information they'll be looking for. The original cost, the total amount of liens that are existing against the property. What's the purpose of the refinance? So if you're doing it just to get a better rate and term, if you're looking to take cash out to add on a bathroom or remodel your kitchen, and then just describe those improvements there and what you estimate that cost will be. And then the last part is how you be holding title of the property. Typically, people hold title in their name. Other people hold title in a trust or in an LLC, so you can just detail that information, how you want to be holding title. And in terms of a purchase, this is where you'll detail the source of your down payment. So if we're going to put $100,000 down on this property, we need to tell the lender where it's coming from. If it's coming from our savings account, if it's coming from our 401k, if we're borrowing it from a family member, or if we're being given to it by a family member. They just want to know where that down payment is coming from. Okay, on to section 3. And this is information about you, the prospective borrower. Pretty self-explanatory. Your name, your core borrower's name. The co-borrower needs to be related. So if it's your spouse, you'll put your information on this side and your spouse's information on this side. If you're not related, then you'll need to fill out two separate 1003, two applications. But you'll detail your name, social security number, phone number, date of birth, years in school, whether or not you're married, number of dependents, children that you have. This is your present and current address. So if whether you're, if it's a house you own or a house that you rent, and how long you've lived there, a mailing address if it's different from where you're currently living. And if you have been residing at that address for less than 2 years, then you'll want to detail your previous address. And again, same information for the co-borrower. Okay, on to section 4, which is the employment information. And you'll put the name and address of your employer. If you're self-employed and it's your business, you'll just click that box, but you'll also put that information as well. So the name of your company as well as the address of the company. Put the number of years that you've been with this company or on this job, and then this is the number of years that you've actually worked in the industry or in the profession. Your title and the business phone. And if you go down to this section, this is where you're going to detail how long you've worked for the company and what your gross monthly income is. So this is your pre-tax income. So if you're making $60,000 a year, then you'll put in $5,000, and then again, make sure you detail the dates of when you started with the company, and obviously it'd be to the present with your most current one, and then the next previous employer to that. So pretty self-explanatory. The title, business phone, and the dates and the income. And again, same information. It's over here on the right section for your co-borrower. Okay, let's go down to section 5, which is the monthly income and your combined housing expenses. And this is just giving you an idea of what income you have coming in on a monthly basis and what your expenses are going out. And if you start over here on the monthly income, again, this is your base monthly income, which we listed earlier as $5,000. But you'll also need to break out your overtime, bonuses, commissions, etc. And that's usually information that can be found on your W-2. So if you go to your tax returns and you get your W-2, it will have the information broken out. Or a lot of times you can go to your employer and just download a copy or get a copy from your Human Resources Department of your previous year's W-2, and it'll detail this information out. So again, make sure that you detail out and show it's important to detail out and break it out individually. Dividends or interest, which would be from savings accounts, stocks that were owned, etc. And then rental income. So if you own a rental property, and this is for other income that you can then detail down in this section here. So it could be anything from lawsuit settlement that you may be collecting on, but whatever it is, you put that amount there and then detail it down in this section here, and you'll see that if it's a borrower, if it's the borrower, you'll put B, and then lawsuit, collecting, and then the monthly amount, maybe $1,000, and you'll put that in there. If it's something for the co-borrower, you just change it, put a C, and then detail it out on that section. So again, fill out this section for the borrower and co-borrower. You'll see that their sections right here. Then you'll move over to the right side, which is the expenses side. And if you're renting, then you'll put obviously your rent payment in there. If you're currently owned, then you'll leave that blank, and then you'll be filling in your current first mortgage. That's just for the first mortgage, the principal and interest. If you have secondary financing, a second mortgage, equity line, you'll put that monthly payment there. You'll break out the monthly homeowners insurance as well as the property taxes. And again, most property taxes are paid either once a year or twice a year. If you have them already impounded in your current mortgage, then you'll have an amount there monthly, but just break that down to a monthly amount. Mortgage insurance, if you have it. Mortgage insurance is typically if you're putting less than 20% down on a property. So either a conventional or an FHA will have mortgage insurance. So if you have that, detail that as well. And then homeowner association dues. If there's anything else that's home related, housing related that was not included in the above. Okay, let's move down to section 6. And this is your assets and liabilities. And in this first section here, you are going to put the amount of funds that were deposited, and this is for a purchase. The number of the funds that were deposited into, say, escrow account when you open a purchase transaction. So in this case, we've said it's $100,000. And I'm sorry, put it in the wrong section. This is actually going to be the name of where it's being held. So we'll call it XYZ escrow and $100,000. So that's only for a purchase transaction. If this is a refinance, you'll leave this section blank. Then you move down and basically list out all of the accounts, the name, address, and most importantly, the account number for each account. So every bank account, credit union account, anything where you have assets, liquid assets, and please detail the name of the account number, and the total amount of funds in the account at the time when you're filling out this application. And you can list, it's got a number of spaces there for all your accounts. If you have run out of room there, you can attach a Word document or Excel spreadsheet to it as well. And it continues all the way down here. So you can put your stocks, bonds, life insurance, real estate if you own other real estate properties, retirement funds, etc. They're just looking to get your total net worth here. So put all your assets on the left-hand side. I'll just scroll back up for a second. This is all of your liabilities. A lot of these will be can be pre-populated from your credit report. This would be like automobile loans, other property, other mortgage loans that you may have, credit card payments. So just make sure that you detail whatever you can, and then we'll pre-populate the rest from your credit report. Okay, so if you scroll down here, this section here at the bottom is schedule real estate owned. This is if you own multiple properties, and if you do, you'll need to detail those out here. So you'll detail the property address, whether it's a rental. If it's a rental, then you'll put R. If you've already sold it, you'll put S, or if it's a pending sale, you'll put PS. Type of property, single family residence, 1 unit, or a duplex, 2 units. The current, estimated value, total amount of liens against the property, the gross rental income, monthly rental income, the gross mortgage payments, the insurance, maintenance, taxes, everything, all the expenses related to that property, to maintaining the property, and that's going to be your net rental income, and you'll do that for every property that you own. And then this section here, the last part is if there's any additional names, if you had a maiden name, any names that you've had where you've applied for credit, you'll need to detail those out along with the name of the creditor and the account number. Okay, we're on to section 7. And this is where you're going to be putting the purchase price of the property, which we said in this case is $400,000. If there's any improvements or repairs you're going to make to it that are going to be put into the purchase price and put into the, more importantly, into the mortgage amount, So you'll detail those information here. A lot of this will be given to you in what's called a good faith estimate, and I'll be doing a subsequent video on that as well. So for the time being, you can just put in the purchase price and leave the rest, and your loan originator will help walk you through that, and you'll fill that in after the fact. This is pretty important. These declarations. Make sure that you check the box for each answer or each question, and make sure that you read the questions. They're pretty self-explanatory, and really, if there's any questions, you can go over it with your loan originator, and they can help walk you through it. And this is just a continuation of section 9 or 7, excuse me, 8. Wow, we're already on 8. This is just a continuation of the above of section 7, the costs. And again, all this you can leave blank for now. But in section 8, if you can just fill out check the boxes for all the declarations for both the borrower and co-borrower. And let's do this real quick. It's primary residence. We'll say yes. Okay, after you've done that, we're going to move down to section 9, which is your signature. Initially, when you fill this out, you'll need to sign this and submit this to the lender. Sometimes it can be done online. I have a form on my website. It's kind of a little bit easier to use and allows us to take this information and pre-populate it into here. But right before you will sign loan documents, or you will be signing a copy of this as well, and it will be complete with all the information filled out. And last one is section 10. It is just information that the federal government likes to keep track to make sure that there are fair practices being used in the mortgage lending process. You do not have to fill this section out. However, if the loan originator is taking this information and is meeting you face to face, they're required to put this information down. But again, this information only helps. I think it allows our Fannie Mae to make sure that fair lending practices are taking place. So with that, after you fill that section out, everything below here does not need to be filled out by you, and you are done and complete. So hopefully this has helped. If you have any questions, feel free to email me at tbranley@tbranley.com, and I wish you the best of luck.